So, already we discussed about the factoring concept, whereby three parties will be there. One is supplier, buyer, another party is for the factor company. So, factor company supports the buyer and supplier for getting the instant cash, immediate cash, right? So, in this scenario, so all the different parties, they can able to achieve their goals. So where supplier, he can able to get the immediate cash from the factor company, and B, he can able to get the goods on credit basis. He can able to make the payment later. Okay, and factor company, their benefit will be their factor fee. Okay, so this is what the concept that we discussed, and in the same way, we discussed with the small case study related to this factoring. Can you read this?
A small textile manufacturer in Italy, Textile Co, has secured a large order from a retail chain in France. The French company offers a 90-day payment term, but Textile Co needs immediate cash to purchase a raw material and pay its workers. Instead of waiting for 90 days, Textile Co sells its receivables invoices to factoring company. In return, the factor advances 80% of the invoice value upfront, with the remaining 20% minus fees paid after the French company settles the invoice.
So this is a very small case, and company name is Textile Co, which is what located in Italy. So where they are ordering from, France. So the same concept. Okay. So there is a buyer, there is a seller. Similarly, there is a factor company. And here the credit duration is what, 90 days. Okay. And next is what, the same thing, like invoices is what settling down, and 80% like here. So 80% of amount will be given by the factor company, and 20% will be settled later. Okay. So this is what a very short case. So case name is actually small business cash flow issues. Since we are dealing with this factoring, it is only for small business. Okay, for domestic trade. Okay, so duration will be very short. So discussion questions related to this case is something that, first question, what do you think textile company choose factoring instead of taking a bank loan? See, they can go for bank loan, right? What is the purpose that they need to go for this factor company? Is there any reason?
They don't want to create new again.
Very good. See, if we approach banks, definitely we are creating a new debt, right? So again, we have to pay the interest rate, debt. We are just creating a new debt. Everything is what fresh. You are starting from the beginning. Okay. So that risk, this supplier, he don't want to take. So that might be the reason. So another different thing is, creating a new debt will be one difficulty. Another one is, bank definitely they'll ask for the collateral. They'll ask for some securities, right? But if in case here, if we go for factor company, it is not like that. Okay. So that is what the benefit. Okay. So we can approach for this factor. Second discussion question is, how does factoring improve the cash flow of textile company in this situation?
It may be due to instant liquidity.
Instant liquidity. Easily it can able to convert into the cash. Say for example, after getting the cash, see, even though he sold the goods, supplier he sold the goods to buyer, he need the cash immediately. He cannot get from the buyer, right? Because buyer will make the payment after 90 days, not by tomorrow. But tomorrow he need to, again he need